Welcome, everyone. Sometimes trying to figure out what really matters in the market with all the noise out there can feel like you're just swamped, right? But that's what we aim to do here, cut through it all. Especially when companies make these really bold moves in tricky times. Today, we're diving headfirst into Pump.fun. If you follow Solana, you've definitely heard of them. They're basically the go-to meme coin launchpad. You know the deal. Users create and trade tokens almost instantly. But don't let meme coin fool you. There's a serious financial story unfolding here. Because right now, Pump.fun is, well, facing some significant headwinds. We're seeing daily revenue dip below $300,000. That's the first time since September 2024. And it's a huge drop, like 92% from their peak back in January 2025. Plus, the competition, it's getting fierce. Let's actually just zipped past them in July, launching, nearly 17,000 meme coins. And you got others like Radiant Bleed, Moonshot. They're all jumping in.
Yeah, and it's exactly because things are tough that what Pump.fun is doing now is so fascinating. They've rolled out this strategy that I think you'd have to call extraordinarily aggressive, potentially game-changing even.
Yeah.
So our mission today for you listening is really to unpack this whole thing. Why are they doing it? What are the implications? And why is it maybe more than just interesting? Why could it be genuinely revolutionary for them?
Okay, let's get into it. The core of the strategy. It's this decision to take 100% all of their daily revenue and plow it straight into token buybacks. Now, anyone in crypto knows that's just not typical. It's pretty wild, actually. What makes this specific move so audacious, especially in this market?
Well, audacious is a good word for it, definitely. Because, look, most platforms with buybacks, maybe they allocate, 1%, maybe 5%. And often that's weekly or even monthly. You mentioned Let's Bonk, they do 1% weekly for BONK buybacks. That's pretty standard. Pump.fun, committing 100% of daily revenue. That's something else entirely. They're basically force-feeding deflation into their tokens ecosystem immediately, substantially. It's designed to shrink the supply fast and potentially create, real upward price pressure.
Right, so it's not just tinkering around the edges.
Not at all. It's a huge commitment. It signals absolute conviction.
So it's like management is saying, forget short-term flexibility. We're betting everything on the long-term value for token holders.
Precisely. They're sacrificing that operational cushion for this very specific goal. It's a strong, strong signal.
And the boldness, it really hits you when you think about when they're doing this. They're launching this massive buyback program right in the middle of what you called a revenue trough.
Exactly. Yeah. The timing is critical here. You said it, daily revenue is under $300. Compare that to the peaks, over $7 million a day back in January. It's a massive difference. Now, normally a company might just, tighten its belt, hunker down, wait it out. But Pump.fun, they're using this downturn as an opportunity. They're buying back their own tokens when the price is, historically speaking, very attractive.
Ah, okay, so they get more bang for their buck, basically.
Exactly. Each dollar of revenue buys back significantly more tokens now than it would have during the peak. It maximizes the impact of every single buyback dollar. It's strategically very clever.
So it's not just reducing the supply, but doing it when it counts the most. Amplifying the effect on market psychology, maybe? Creating a kind of coiled spring.
That's a great way to put it. It potentially sets the stage for a much stronger rebound if or when market conditions improve.
Which brings up a really interesting point. How does this kind of financial maneuver set them apart? I mean, the market's crowded. Everyone else seems focused on features, users, the usual stuff. How does this carve out a unique space?
It fundamentally changes their positioning. While others are in that, let's call it a feature arms race or just chasing user numbers, Pump.fun is essentially becoming a pioneer in, financial engineering within this specific niche. Revenue-based buybacks, aggressive deflationary mechanics, that's their differentiator now.
So instead of just focusing on the platform experience,
They're focusing on the intrinsic value proposition of the token itself. They're building value directly into it, which is frankly quite different from just adding another bell or whistle to the platform.
and that could attract a different kind of investor, couldn't it?
Absolutely.
Maybe more sophisticated types, institutional or retail, who are specifically looking for things like clear tokenomics, value returning mechanisms.
I think so. We're seeing the broader crypto market mature, slowly but surely. People are looking past the hype more often now. They want projects with, let's call them shareholder-friendly policies, even in the meme coin space. Pump.fun's strategy speaks directly to that. It offers something tangible, a clear mechanism for value accretion that many competitors just don't have.
It really feels like a case study in sophisticated countercyclical thinking. Can you break that down a bit more? What does countercyclical really mean here, and why is it so notable right now?
Yeah, it's a great point. Countercyclical basically means going against the prevailing economic tide. So when times are tough, like now with lower revenues, the typical reaction is to pull back, cut costs, reduce spending, play it safe. Pump.fun is doing the opposite. They're increasing their commitment to token value, doubling down precisely because the asset is cheaper.
Like buying low in the stock market.
Exactly like that.
All
It's
right.
classic investment strategy, really. In traditional finance, you often see smart companies ramp up share buybacks during market downturns. They see it as the best time to deploy capital to maximize long-term shareholder value. Pump.fun is applying that same disciplined, almost institutional-grade logic to the, let's face it, often chaotic world of meme coin launchpads.
So, pulling it all together, what does this strategy signal about their outlook?
It signals immense confidence, strong conviction that the market will eventually recover, that their revenues will grow again. It's not just a defensive move, it's an offensive bet on their own future, placed when things look toughest.
Okay, so that wraps our deep dive into PumpSun's really audacious strategy shift. We've covered the 100% revenue buyback, unprecedented scale, really, the smart timing, doing it during this revenue low point, how it sets them apart as a financial innovator in a field focused elsewhere, and that countercyclical mindset driving it all.
Yeah, it really shows how tough times can actually spur incredible innovation, doesn't it? Instead of just reacting defensively, they potentially change the game, or at least try to redefine how value is built in their specific market. And it leaves us, and you listening, with a pretty important question to chew on. How might these kinds of aggressive, countercyclical financial strategies start to reshape competition in these newer, more volatile markets, like meme coin launchpads, especially when assets seem cheap and most players are thinking conventionally?